for the quarter ended 30th June 2021. We have with us today Mr. Puneet Khurana, Managing Director, and Mr. Sanjeev Kapoor, Chief Financial Officer of the company. Before we begin, I would like to state that some of the statements made in today's call may be forward-looking in nature. A detailed statement in this regard is available in the Q1 FY22 results presentation that has been sent out earlier. I now request Mr. Puneet Khurana to start the proceedings on this call.
Good evening, everyone. I warmly welcome you to the Everest Kanto Cylinder earnings conference call to discuss the operating and financial performance for the quarter ended June 30th, 2021. I would like to start by talking briefly about the background of the company for the benefit of those who have not followed the company closely in the recent period. I will then cover the Q1 FY22 financial and operating performance and the key underlying business drivers. EKC has been in the business of manufacturing seamless steel cylinders over the last 4 decades. In this period, we have delivered over 20 million industrial and CNG cylinders, and we are leading manufacturers in India with aggregate capacity of more than 900,000 cylinders annually. Of this, about 7 lakh cylinders capacity is in India and 2 lakh cylinders is aggregate across our overseas operations in UAE and United States. Here I would like to add that we have recently undertaken some incremental debottling and capex initiatives that have optimized production and allowed us to deliver more volume than the stated capacity. This is reflected in the increased revenue turnover. Our product range includes industrial, CNG and jumbo cylinders used for high pressure storage gases that have application in fire suppression systems, medical establishments, aerospace, defense and automobile. Production lines are fungible, which means that production can be directed to fulfill our customers' requirement, if any, of the key demand areas. During Q1, we have moved into a current financial year, F122, on a strong note. We have witnessed further expansion in demand across every geography of our presence, thereby strengthening our position in Indian market, while at the same time the overseas operations have seen improvement that we believe are sustainable. In Indian operations, as indicated earlier, we have grown output by making production processes more efficient and by identifying and removing bottlenecks. This has allowed more output and turnover without any significant capital expenditure, resulting in quick scale-up and high ROI. While these initiatives have provided the bandwidth to address near-term demand growth visibility, we also continue to pursue the expansion in Gujarat that will further add our production capacity to 2 lakh cylinders. In this new facility, we propose to use some of the available equipment so that the project cost will be significantly lower at 45 crores and will be financed largely from internal accruals. In addition, both UAE and US operations deliver substantial improvement in revenue, allowing for an overall contribution to the financial numbers. In our UAE operations, we are catering to a large number of market-growing CNG demand from Egypt and other emerging markets in Africa and South America. The UAE subsidy is also moving forward on expansion plans in Hungary. Fiscal support from the government and local authorities will make the expansion even more lucrative, while the EU-based production improves customer acceptance and our competitiveness in significant markets. During the quarter, we have recorded strong growth of 95% year-on-year in the consolidated revenue. Growth was based on demand from multiple sectors. It was partly driven by growth by orders from medical oxygen sector, as we remain committed to support the country's fight against COVID. As the second wave surged through the country, we also saw substantial demand from the auto OE and gas infrastructure companies. As the demand for CNG-based mobility expands and the whole ecosystem comprises additional gas pumps and new CNG car models across the country, we see a circular growth opportunity in this space. Over the next several years, as the market-leading manufacturer of high-pressure gas cylinders in India, we are supporting the government plan to bring gas into the mainstream of the country's energy mix. At the same time, demand for medical oxygen cylinders is seen to be short-term, and we look forward to the vaccination drive resulting in virus cases reducing over time. Coming to the financial performance, during Q1 FY22, EKC consolidated revenue grew by 95% to 335 crores. EBITDA was higher by 182% to rupees 88.4 crores. EBITDA margin expanded from 18 to 26.4%, mainly driven by top-line growth on a stable operating base. Profit before tax, before exceptional item and foreign exchange variation was up by 425% to rupees 79.8 crores. During the quarter, PAT expanded by 962% to rupees 69.2 crores. But this includes the benefits of all paycheck protection loan waivers in the US. That is an exceptional item of rupees 16.7 crores and explained in Q1 result documents. Overall, Q1 performance represents a significant improvement, and we expect business visibility to maintain in each geography, even as demand for medical oxygen cylinders is scaled down considerably. We are focusing on a higher value product, which should allow margins to maintain across every region. Margin comfort also comes from the raw material prices pass-through mechanism that we operate with our customers. Going forward, our outlook remains positive as economic and environmental considerations drive the growth of gas-fueled economies globally. With wider vaccination drive being carried across the country, we expect more normalized economic activities to return sooner than later. With a sharp bounce back in economic growth expected this year, we remain confident that to continue robust performance. While we are looking forward for leveraging our position to drive profitable growth, we will also continue to focus on structural organizational improvement to drive framework for a long-term value creation across all various initiatives. On that note, I come to an end to my opening remarks and request the moderator to open the forum for any operational and strategic-led question that you may have. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Anyone who would like to ask a question, please press star and 1 at this time. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Anyone who would like to ask a question, please press star and 1. The first question is from the line of Sunil Jain from Nirmal Bang Securities. Please go ahead.
Yeah. Good evening, sir, and congratulations on good set of numbers.
Thank you.
I got 2-3 questions. First of all, you said that the demand in the US and UAE, the sales over there are sustainable. So what has moved in this quarter? Because if you see the UAE sales, which is highest in last 7-8 quarters. So what has changed over there? And similar is the case with the US also. And whether these sales of 50-40 crores are sustainable, just to confirm that.
Yeah, this is Sanjeev. In respect to Dubai, in fact, earlier the European countries were affected by COVID, and since COVID has sort of died down at places also, so the business is growing now. And in fact, we expect that they will continue to go ahead with similar quarters and complete a good year for them. For US also, the same reason, because COVID had really affected them, and now they are back to normal lines, and we again believe that they will also continue to do as done in this quarter.
So US, we were facing problem like we supplied to all defense and all, and they were not lifting the material. So that has now come back.
Yes, that has started now.
Okay. And second question related to gross margin. If I see your gross margin in different quarter, it varies a lot. It's somewhere it went down to as low as 42% in some quarter, and this quarter it has come up to around 51, 52%. So why this variance comes? Is it because of product mix or any specific reason for that?
Yeah, one of the reasons is product mix, and otherwise there are various other factors. But today, I mean, prices are all under control because we are able to factor in the price for the market. So we expect that we'll have similar margins available to us going forward.
But whatever been achieved in last 1 or 2 quarters, that is over 50%, that gross margin is sustainable, you mean to say?
Yeah.
And whether the pharma has a higher margin or it's a similar, or auto has a higher margin?
Auto will always have a higher margin.
Okay, fine. And another question was, this Hungary expansion, what is the status and when it can start production? And similar is the case with Gujarat, when it can start production.
In case of Hungary, there it's still, the processes are still on. So the whole process would really start in the next quarter. The start of understanding the project lines and tying up all our, if at all we need to borrow, then those lines need to be established, plus the incentives and other things from the government. So clarity would be more so available in the following period.
Okay. So once you get all that clarity, then it will be a process of a year also?
Yeah. That will be a year at least.
And then the plant need to be approved by the consumer and all?
Yes. I mean, obviously, since it's a safety product, it needs to go through various processes. And we'll be able to establish all those processes during the timeline of setting up the project.
Okay. And what about the Gujarat project, when it can start? Because I think that should start a bit sooner.
Yeah, Gujarat also, we are trying to, first focus clearly on the immediate action plan of debottlenecking and getting more revenue, because now the market is very robust, and we expect that first let's focus on what we can immediately do. So immediately we are focusing on debottlenecking and enhancing capacities, which is very, very effective, and that is visible also in our results. And going forward, yes, that is, we'll take it up in due course of time.
Okay. Thank you very much. I'll fall back in queue. I'll got some few more questions, but I'll come back again. Thank you very much.
Thank you. The next question is from the line of Jinesh Sanghvi from Principal India. Please go ahead.
Yes, sir. Sir, on the debottlenecking, in the opening comments, you said that that has helped volume growth. So if you can share some numbers out there and whether this momentum can continue.
We had, said that it will be around a 10 to 15% benefit that the company will receive with this kind of debottling, and that is what is being seen, now.
So from the top line perspective, you expect this to kind of largely continue?
Of course, it will continue. Now that
because Q1 will have probably some bit of this medical oxygen demand also.
Right.
So should one expect some bit of a drop in Q2 and Q3 since the medical oxygen volumes would again go away?
I think the business has been a little misunderstood. Our business has always been contributing 50% of industrial cylinder. Industrial is generally industrial cylinders where you have oxygen, nitrogen, hydrogen. There are lots of gases. Recently what has happened is that, of course, because of this COVID situation, medical oxygen seems to be a front runner, and you see a lot of talk about it. But this has always been the business of the company. So industrial cylinder is always there, but the growth that we have seen over the last 5 years is all coming from CNG. The big growth, the big numbers that you are seeing is all coming from CNG. So that will continue, because CNG is of course going to grow much faster. And again, CNG is growing so fast, so any reduction which I don't feel, because industrial cylinder will also continue to grow because the economy is growing. So industrial market will also grow and CNG will also grow, but CNG will grow much faster because it is of course CNG is replacing the existing diesel requirements. So it's a much faster growing area. So that is going to continue. But medical oxygen as such is not going to it is going to continue to. It is already we are already seeing reduce in this quarter also.
Okay.
It is already reduced. We're almost 50-50%, right? Or 60. Yeah. We are almost at 50-50. 50% has come from CNG and 50 has come from industrial.
Right.
So we are already seeing that it is coming to because this wave, if you realize one thing, that businesses were working. There was no lockdown on businesses as such.
Right.
In the first wave, you had a lot of lockdown, and that is the time where medical was very prominent in the last year, first Q1, right? Quarter 1, that was, right?
Only medical.
Yeah, only medical. That was very prominent, that medical had driven the company. But in this quarter, industry was working, even though there was a lot of, this second wave was very bad, but still industry, was allowed to work. There was no disruption happening at the industry level. So, automobile industry, also, they continue to manufacture, may not get 100%, but they were working at 40-50% level. So, industry was continuing in the second wave. And so we saw that CNG had quite a good run in the second wave. Even the conversion market, you see our cylinders are also used in the aftermarket where the existing old vehicles are converted, and that was also continuing. There was no stoppage in the conversion. People were still converting because diesel prices were rising, so people were still converting the vehicles into CNG.
Okay. Fine. And secondly, sir, on the US Hungary segmental revenue, if we look at, we have seen a sharp increase from around 20 crore to 40 odd crore on the revenue.
I'll let Sanjeev answer this.
Yeah. Tell me, sir.
Yeah. So on the USA Hungary segmental revenue, we have seen a sharp jump up from around 20 crore to 41 crore.
Right.
So as you said that this particular segment you foresee it to be stable. So should one build in this kind of a number, and were there any one-offs in the US Hungary operations out there?
No, in this quarter there were no one-offs except for that income which we got in US, which has been very clearly shown separately. There was a waiver of a loan of in US of 16 crores.
Yeah, that's in the exceptional items, right?
Yeah.
But from a top line perspective, that 20 to 40 crore jump, there is no one-off kind of a thing.
No, there is no one-off. Now this will be stable. In fact, this is what we are expecting. I have already remarked that this is how we look forward, and they may continue to have similar quarters.
Okay. And on the Hungary operation, you said that you are looking at expansion. So at what utilization rate is the plant operating right now?
No, Hungary we haven't said it's fine. Hungary is a project which has to be set up.
Right.
The question was on the project being set up. So it's still in a nascent stage. And going forward, yes, by next quarter we'll have everything in place where we know that once the startup happens, then within some time we'll be able to complete that project.
Okay,
it's a project. It's not a existing operation.
But you see that kind of a yeah, I understand that it's a new project that you, but you see that kind of a demand growth actually coming in this particular market, because in the past this were the regions probably wherein we were kind of hit in a bad way, and we had losses coming out of this particular segment.
Yeah, there is ample market out there. The advantage which we'll have is that this product has more acceptability because it's being manufactured in a EU country. So EU gives it a added advantage, And the another thing is that when something is manufactured within Hungary, it saves on custom duty.
Okay.
So with these advantages, we foresee a good market.
Okay. Fine. And sir, on the segmental side, on the USA Hungary, is there any is the exceptional item reported out here in the EBIT number?
In the PTIT, yes, it will include that exceptional item also.
Okay.
Yeah.
Fine. So overall, from a volume perspective, one can expect a 10 to 15% volume growth for this year because of the debottlenecking, right?
Right.
Okay. Fine, sir. Thanks, sir.
Thank you. The next question is from the line of Akshay Chetta from Perfect Research. Please go ahead.
Yeah. A very good afternoon, sir. Sir, I wanted to know what are your views on the revenue, specifically on the domestic front. Means at the given rate, can they touch 1,000 crore for the entire FY22? Hello.
The rate that we are, I think this can be sustainable. The rate that we are on right now.
Can it cross 1,100 or something like that?
I can just tell you that this rate that we have done this quarter, it is sustainable.
Okay. Sir, and I also wanted to know whether the EBITDA margins of 10% is possible for at the subsidiary level, sir?
Improve we continue to improve on their margins. So whatever margin exists as of now, yes, going forward there will be improvement.
Range or something like that, please.
We can't predict the range, but yes, there will be improvement.
Okay. Thank you so much, sir.
Thank you. The next question is from the line of Naitik Modi from OHM Portfolio. Please go ahead.
Yeah, thanks for the opportunity and congrats for a fine performance. Sir, on the India, I just wanted your comments on the margins for India as well as your global business. So in India, what is a realistic sustainable margins, and similarly, what is it for the global subsidiary business that we have?
So I think current margins, we can say they are quite sustainable for India.
Even India?
Yeah, but global margins, see what is happening is, things are just coming back, in the US and in the UAE, and we feel that, things will only get better. So hopefully the margins also will improve, once the business starts coming back. They have been quite, last year has been quite difficult for them. So, now I feel that it will definitely improve going forward, margins also, and, the overall business will improve.
So what is, so are we looking at a certain number, percentage that can we do 10% or 15% for our global businesses? So what is our internal working?
Internal working, of course, we...
No, there has to be a system, a realistic number that, okay, this is what we can achieve.
We do that, but what has happened now over the last, because of this COVID situation, things have got a little bit disturbed in the international market.
Okay.
So it's been a little difficult to, because a lot of things got held up because of, customers not picking up the material because of the COVID in the international market, and things got a lot disturbed, with the steel prices also going up at the same time, and a lot of things happened. So it's very difficult to kind of achieve what we set out to do in the international business. But like I said, the things are improving, and hopefully it will look up, going forward, as we can already see that the top lines have started going up. So I think from next quarter, hopefully, even this kind of discussion could be done.
Okay, fine. Thank you.
Thank you.
Thank you. Thank you. The next question is from the line of Pasha Vora from Anand Automobiles. Please go ahead. I will move to the next question since there's no response on this line. The next question is from the line of Parag Someshwar from AG Securities. Please go ahead.
Yeah, I'm referring to your standalone results. Your sales have gone up to 245 crores in Q1 compared to 232 crores in Q4. But your other expenses have come down from 36 crores to 24 crores. So can you just explain where this 12 crores savings has happened? Because it's almost 5%, adds 5% to the EBITDA margin.
There were some one-time hits in the last quarter, which we don't have this quarter.
Okay.
So
this 24 crores is a sustainable number?
I mean, there will be, surely there will be some increase in the expenses, obviously, I mean, going forward. But yeah, we will try and, sort of maintain at such levels.
Okay. So you mean to say the margins, standalone margins, which has gone up from 26% to 34% on two counts, 2% on account of raw material and 6% on account of other expenses, 34% kind of margins are sustainable on standalone level.
Even going forward, there can be increase in prices and there can be other events which to have. But our aim is to ensure that we try and maintain what we normally have. So yes, we will try our best to try and maintain margins.
So to sum up Q1 sales and Q1 margins in standalone, that we can take this as a guide and it's sustainable.
See, you can. The best is you are best persons to calculate. So I wouldn't want.
A couple of percentages here we understand. That's
yeah.
possible. But sales are possible. 245 crores, that kind of sales.
So, we are doing good business, so we believe that we'll be able to map up a lot many things.
Okay. Thank you very much.
Thank you. The next question is from the line of Prakash Chandra Prabhakar, an individual investor. Please go ahead.
Hi, good afternoon. Congratulations to the management of Everest Kanto, and I hope you keep shining bright like this. I just want to follow up on three questions that I had during the last investor communication. My first question is that, the three things that we had discussed. One thing that we discussed that would you have an outlook, a different outlook on treating the promoters' unsecured loan in the business, because the promoters are supposed to be managing the business and not getting interest on their loan? That was the first question I wanted to follow up on. Is there a management outlook on that? The second thing that I wanted to, kind of ask is that what is the status of the blacklisting that the Government of India's subsidiary had done? Is there a movement on that, and you have been able to, kind of get that thing absolved, kind of removed, or where do we stand at? And the third one is, of course, that I'm very, very upbeat about your business in the U.S. market. So, in terms of your internal projection, internal management, MIS, Management Information Systems, have you changed your projection for the U.S. market in terms of what you were envisaging it to be earlier and what you envisage it to be now, especially in light of that point that the U.S. is going to have a lot of focus on, and now that, like the bipartisan deal is also through and all those expenses will happen, is there a shift in the outlook on the U.S. business?
So yeah, first thing on the unsecured loan to the promoters, we are putting in a plan to return all the money back to the promoters. As the cash flow improves, this is our plan to do that anyway.
Can we have a timeline around that?
Maybe this financial year we'll try to do that.
Okay.
Yeah, and on the blacklisting, see that we are in continuous touch with the government agency, and we feel that we are making some headway, and hopefully we should see some good outcome from this, in the next maybe in the next 2 months.
Okay.
Yeah.
You haven't had any follow-up communication from them which was adverse in nature?
No.
Fantastic. Very good.
No. And in the U.S. business, last year has been, quite bad in the U.S. business, and this year definitely things have turned around. I think the pickup also started, right, which was stuck. Because, a lot of things, US company, they do a lot of defense activities. So, sometimes in defense, if we are a part of we are a small part of a big project. So, if sometimes things get stuck, then, you be a part of that, you also get stuck in the whole, big project. So, now we feel that has started to happen, that, the pickup has started, so hopefully now, as it is, we are seeing that the sales are up, and, the margin will also hopefully, come back. So, we have, in our internal working, we have been, quite conservative last year, but this year we are a little bit more optimistic, right?
Yes.
On how things are going to pan out.
So the reason why I brought this up again is because I'm mindful of the fact that your concentration of the business is in the defense sector and particularly in the Navy. And obviously because, as you rightly put it, that you're a small part of a larger project and therefore you really don't have too much of this thing. However, if you open up other segments like infrastructure rebuild, road construction, railway modernization, which is one of the top of the agenda of the US government, then I think probably you will have probably a new segment to be looking at where your outlook could be better than what it would be in the defense. Because in the defense project, anyway, you will not be having any kind of procurement leverage.
Product application should be there.
Yes.
Application should be there in this sector that you are mentioning.
So one suggestion, because I'm a mechanical engineer as well, as I've heard you emphasize in the questions earlier, that you are in the business of industrial gases, irrespective of whether it is oxygen, hydrogen, whatever it is. So I cannot imagine of any infrastructure construction, like rejuvenation program, worth its size, which will not have a huge need of, operating with industrial gases. So I think you can be rest assured that there will be a lot of need for that from a demand perspective. It's just that whether the management has a focus on, discovering a new segment, which is what I wanted to kind of sensitize.
The CPI, this company, is in the US, for almost 100 years now. So they have a very good customer base, good network. So, anything that, any sector that comes up will definitely, they cannot ignore us in the US. So definitely if any sector is coming up and any, things are happening, we'll definitely be a part of that.
Right. So I don't want to be nitpicking on this and I don't want to be sounding quite sticky about it, but, there is a difference when you wait for the customer to come to you versus you have a management approach where you want to reach out to the customer, not for projection.
You're right. I'll definitely, something, you've given me some food for thought. I'll definitely, put it across to my US team and ask them that, this is something that's coming up. But, oil and gas is another sector that has always been, hydrogen is another sector, so we have a lot of sectors that are very promising in the business, that we are continuously monitoring and watching. Only thing is that the period is, kind of slowed down things,
Right.
So, that is why, hopefully this, when, all these things like this going forward, things should be...
No, of course. Understand that. But I mean, see, as an active investor, my purpose was to kind of resensitize this for pivot to you. And finally, before I close my part of the call, you are doing fantastically well. And I've been listening to your responses for a few, sessions. Largely there's a lot of optimism in the management as well as in the investors. And now all this obviously needs to translate into, better wealth for the investor as well as the promoter. And I feel that, now is the time when the company should be aggressively looking at some, institutional investors who want to take positions in smart companies or companies of the future. So just some thoughts on that. Are you working in those directions where some market?
We are putting the score on the board. Yeah. That's my job, Now, the company is, consistently delivering quarter to quarter. So I think it's, we are doing all the, things that we are supposed to do.
Right. Correct. So can we hope to see nice marquee investors on the investor list of EKC sooner than later?
Yeah, sure. I'm sure it's going to be there, definitely.
Fantastic. Great. My best wishes.
Thank you so much.
Thanks.
Thank you. The next question from the line of Nisa Vora from DC Enterprise. Please go ahead.
Good evening, sir. As an investor, I was a little concerned due to increasing imports from China market. So how large do you think it will have an impact on our business in the upcoming quarters?
So, I don't see that being a much impact, because, now China is also not cheap. The products from China are also not any more cheap.
Okay.
And, so I don't see that being a major impact on our business.
Right. Fine. Got it. Thank you.
Thank you. The next question is from the line of Abhishek Agarwal from Prithvi Finmart. Please go ahead.
Hello. Sir, my question is regarding one of the player in India market has come up with the composite cylinder.
Yes.
So how do you see this product competing with us?
See, composite cylinders are, a little bit, a little expensive product.
Okay.
And composites has a very special application in specific places in the market. So steel cylinders definitely have a much larger appeal, when it comes to CNG application and storage. So you definitely globally also, steel is still, dominates 95% of the market.
Okay.
Composite cylinders definitely have their special requirements, special customers, who use these products.
Okay. So, sir, have we any time in past we have think on this composite cylinder? Because when we spoke last time, I think you.
See, we have a facility in the US also making these composite cylinders.
Okay.
And we are continuously proposing it to our customers, but customers are a little resistant because of the cost.
Okay.
So this product, like I said, it's a very specific applications are there for this product.
So how costly it is compared to steel? This?
At least 3 times.
Okay. And in future, if suppose there is a large demand or acceptance in the market, large acceptance for this product, so can we...
So then definitely, see, we will definitely have to look into, getting into these products when we see that the market is growing.
Okay.
We'll definitely, but today what is happening is that, we are already so engaged in what we are doing, because our product line is also, CNG business is also growing quite fast, and, steel cylinder is dominantly very, very easily, easy to use, friendly to use, available, cheap. So, this kind of product is very well accepted in the market and will continue to be acceptable at certain segments in the market. There will always be special segments where you will have these composite cylinders.
Correct.
So but as this segment, and we are predominantly steel manufacturing cylinders, so we are very focused right now on growing this segment and definitely keeping a watch on what's happening on the composite segment. Once we feel that now the time has come that we need to, invest and get into this segment, we'll definitely, be looking at that. So the technology as such is available with the company.
Okay.
So there is no thing that, we need to go and worry about that this technology is not available with us. Technology is available. Only matter is to take a decision about investment. And, company as such today, investment is also not such a big challenge, to make investments into products. So, that's not a challenge. The only thing is the timing has to be correct, because you make an investment and then that you don't find that they're running up to the levels, and then you have all these overheads, and then, that's not a wise thing to do.
Exactly.
Because you need to set up a separate plant, and then you set up another facility, people unnecessarily adding overheads, and then, finding yourselves, stranded. So we want to be very, want to take a appropriate time decision, when we feel that this product is going to come into in a mainstream and going to be a large demand, then we will, probably 1 year hence, we'll make those investments. So, we can be in line with this product.
Okay. Sir, can you tell me that what was our capex plan, if I missed that?
Yeah, around 45 crore.
Okay. So how much capacity it will bring?
200,000, 2 lakh cylinders.
Okay. Done, sir. Thanks, sir.
Thank you.
Thank you. The next question is from the line of Anil Kumar Sharma, an individual investor. Please go ahead.
Good afternoon, and congrats for the great numbers, sir.
Thank you, sir. Thank you.
My question is on medical gas. Due to blacklisting, are we supplying to the states or other agencies, or what is the ratio? How much we are selling this medical cylinders?
So now definitely medical cylinders is coming down, but we are supplying to states, wherever, because we have taken orders, so all those, requirements which are still pending are still being supplied.
Only pending, we are getting further orders?
No, new orders are coming, but as you see, the COVID situation also is improving.
Right.
The demand for medical oxygen cylinders also coming down.
Okay. Right. So this is all from my side. All other my questions have already answered. Thanks.
Okay.
And well wishes for your coming quarters. Thank you.
Thank you so much. Thank you.
Thank you. The next question is from the line of Kimesh Sangvi from Principal India. Please go ahead.
Yes, sir. Thanks for the opportunity. Couple of things, sir. Have we seen any product mix change for ourselves in the last 1 year, like compared to FY21? How has the first quarter panned out, and how do you foresee that going ahead? That is one. And secondly, if you can share the quantum of inventory of steel that we maintain in our books. Is it 15 days, 20 days, or what is that number?
So inventory we maintain around 3 months.
Okay.
And as the product is concerned, this is very dynamic. It keeps changing in the sense the customer, because as the vehicle models change, the product also goes through some changes.
Okay.
Yeah. So that's very dynamic, So every year you'll see that, some products are there, some products have changed, some have been added. So these things keep coming, these things keep happening. Only, standard cylinders of like medical oxygen probably will just, remain a medical oxygen cylinder.
Right. So just trying to understand this more from a margin perspective, because naturally some products will have a higher margin vis-a-vis some other products in the product basket. So just trying to understand if there was something which helped us during the Q1 quarter, and probably on a normalized basis, probably that will not be the case. So just trying to understand, was there something which helped us to come at this 32-33% level of margins, which probably was not there? So
I think it's general market pricing.
Okay.
Yeah.
Okay. And sir, any kind of an inventory gain on the steel front as well, which has helped the raw material cost probably look a bit on the lower side? Is that a possibility or no?
No, so the one, so we will anyway absorb it in this quarter. Is that something? So I think let me put it to Sanjeev. I think the finance guy.
Yeah. So see, the inventory gain. We had material which was there with us, and now the pricing has increased.
Right.
But advantage we already taken this quarter.
Sorry, I could not get you, sir. Can you come again on this?
The price advantage, if at all, we had got it in this quarter itself. So now we are getting material of the normal rate.
Okay, so Q1 did had some bit of gain advantage out there, right?
Yeah.
Okay. And can you share that number, sir?
No, we can't share that number.
Okay, fine, sir. No problem. Thank you.
Thank you. The next question is from the line of Sunil Jain from Nirmal Bang Securities. Please go ahead.
Yeah, my question, thank you for follow-up, and my question relate to more of what is the current debt, and we see a good decline in the interest cost. So is this normal or is there something exceptional in this?
Sorry, can you say that again? Sorry. What is the current debt? You said what is the current debt?
Yeah, and the interest cost, finance cost,
Okay.
which has come down from around 7.5 crore in last quarter to 2.5 crore. So there is a substantial decline. So any specific reason for that? Why it has come down?
This time we had money from China, which is.
And we had received around 65 crore rupees from China.
Yeah.
Yeah, and of course, current cash flows has helped. This you can see the differential in interest rate.
Okay, so the total gain is on account of reduction of debt, you mean to say?
Yeah, you could say that. Yeah, you could say that. Yes.
So what is the current debt, if you can say that figure?
In India, we have no debt, right? Oh,
Hey, total
consolidated. Sorry.
Yeah, total consolidated is 124 crores as of June.
Okay. Okay, and that 124 crore, this is what the interest cost is. Okay, fine. Thank you. That was my question.
Thank you.
Thank you. The next question is from the line of Parshva Vora from Anand Automobiles. Please go ahead.
Congratulations for a good set of numbers.
Thank you.
The first question was, as the other states are opening with the CNG station, so for that, is our company planning to set up a new production line? Because company is having several pending orders and not able to meet the current requirement.
So yeah, definitely, we are planning to set up a new facility in Gujarat with 2 lakh cylinders. This is our plan.
Okay. Over where? In Gandhidham only?
Yeah, it will be around Gandhidham only, yes.
Okay. Another question was, as Confidence Petro and MKC got the PESO permission for the production of CNG cylinders and medical oxygen cylinder, will that affect our market, current market?
No, I don't think so. It should not affect our market.
Okay. Maybe they have a higher set of numbers of production. Maybe they have also more than 2 lakh or 3 lakh cylinder capacity.
Okay.
That's why. And also, GFE is also planning for a new production in Mehsana.
Yeah, okay. Yes, of course, now this market is growing. Everybody is going to plan expansion.
Okay.
Yeah. So, and the market is, expanding accordingly. Market is also growing quite fast. So I think all these capacities should be, get consumed in the market.
Okay. And what about the BS6? If the approvals will not get for the aftermarket, it will affect our market?
No. See, what will happen is it will all become an OEM business then.
Okay.
So we are currently doing OEM and, BS6 hasn't come. You're right. Aftermarket BS6 hasn't come. So, there is definitely, that business, maybe in the long run, maybe after 5 years, maybe that business, if they don't get BS6, maybe that business will not exist after 5 years. Because even in India today, BS4, a lot of vehicles are there still.
Yes.
Lakhs and lakhs of vehicles because, you go to new cities and other things, there are so many vehicles and running on BS4 still. So I think maybe if they don't get BS6, yes, definitely this is going to, the aftermarket will, maybe in the next 5 years it will not be there.
Okay, thank you.
Thank you.
Thank you. The next question is from the line of Jayant, an individual investor. Please go ahead.
Hi, thank you for the opportunity. One of my colleagues also asked about this question. On the debt, you said that the debt is around 124 crores, which is significantly lower on a year-on-year basis. Definitely. With this, all the debt ratios have also improved significantly. Are you in discussion with the rating agencies? Because right now your rating with CARE is at
Of course,
the lowest
sir, we
end?
are always in discussion with rating agencies, but they are also giving us one notch at one time, Though, the performance is very good, but we are not getting, are we going to get some?
Yeah, we are trying. We are working on that.
Yeah.
Maybe in due course of time, we'll have.
Definitely, you will see that, because all the commitment the company has made, over the period of the last year has all fulfilled all their, matters that were there with the rating agencies, why we were not being rated. China money has come, the performance has shown. So, I think it's a matter of time that the rating will continuously keep going up as we move quarter to quarter.
Yeah, because right now it is at the lowest end of the investment grade rating, which for the ratios that you all have right now for gearing and leverage, it deserves far much better.
Yes, I know that. Hopefully, you'll see in the next quarter that will change.
Okay.
Yeah.
Thank you so much.
Thank you.
That's it from me.
Thank you. The next question from the line of Rahul, an individual investor. Please go ahead. Rahul, your line has been unmuted. You may go ahead with your question, please. Rahul, please unmute your line from your handset and ask your question.
Yeah. Hi. Thanks a lot for the opportunity. I just want to know what is the current capacity utilization at the India plant?
We are going above the rated capacity.
See, we are anyway working above the rated capacity.
So it's more than 100%.
It's not more than 100%, but it is. It's quite the our company, our product is a little bit different. It is a little hot working, so it doesn't go up to 100%, but definitely it is at capacity right now. But the only thing is that over the last 6-8 months, the debottling processes have gained us some benefits, and that's why we are seeing some improvement in volume.
Okay. And by when do you plan to get the new capacity of 200,000 online?
Maybe next year.
So 12 months from now or the end of financial year?
Maybe about 18 months from now.
Okay. And just one last pertaining to that. So do you see the utilization in the new capacity to be at a ramping up level, or you expect it to be?
It will be a ramping up level only. It will not, immediately. It's a new capacity, so it will take time to, it will take its own ramping time.
Okay. So given that there is a huge demand, like you were mentioning.
No, see, there is a huge demand, but as a new plant, it will take its own time. I will wish that we can make as many as we want, but it will take time. Once the plant starts, and because in our product, we have a lot of approval processes. Approval from customers, approval from government agencies. So being a safety product, that is also another a little bit of a thing that needs to be done. So it's not only process that needs to be run up and running. Also approvals have to be in place.
So the new facility has to be approved, or the company?
Yes, of course. Has to be approved by government agencies and plus by individual customers also.
Okay.
Yeah. We have a process. Approval process is quite lengthy, because being a safety product, there are a lot of, processes that we need to go through before approving the facility.
But there's no way of increasing capacity at the current.
Yeah, so that's why in the current, that's what we are doing today. That is what the initiative the company has taken, that we debottle whatever we can, whatever best we can, we debottle. And we are seeing the result. It is coming. We have debottled and we are getting benefits from that capacity increase.
Right. Maybe like if you move out some non-core activities like storage and other things to outside facilities.
Yeah, of course. Those are all thought out. But as a production line, there have some limitations.
Okay.
Yeah, so you can only go up to a certain level, and then we will reach a point that only a new facility can give more.
Okay. So just one last question is, in the current facility, there's scope of more debottlenecking and increase capacity, or you're done?
We are continuously doing it. We are finding ways to, increase capacity. Definitely, we are improving everything that we can.
So there is more scope?
Yeah, there's not much scope, but definitely we are working on it.
Okay. That's about it from my side.
Thank you. Thank you.
Thank you. The next question is from the line of Anil Jain from Equifashion Capital. Please go ahead.
Yeah, thanks for the opportunity. I just wanted to know what is our capacity utilization in US and UAE, respectively.
So UAE is around 50%.
Okay, 50.
US
is a project base.
See, US is a project-based production. So not really, we can't, the capacity, they have a huge capacity. But it's more of a project-based kind of industry. So a little different way of looking at it.
Okay, but if you can't able to give a number, can you quantify what kind of revenue we can generate yearly from US?
What kind of revenue can we generate from US?
Yeah, in the current, can we extrapolate the current quarter?
Yeah, I think you can do that. You can do that. Yes.
20 million.
Yeah.
Okay. And since we have now good amount of cash flows and we have very low amount of debt remain, so when can we expect to get debt free?
I think for next year it should be surely by next year.
FY23, you want to say?
Yeah.
Okay, and one last from my side. Since your India capacity is already exhausted after the debottlenecking, maybe by FY22. So how do you expect growth to come from India operations in FY23 till the new capacity comes on stream?
A lot of, maybe on higher value product, in the product mix.
Okay.
Focus on those areas.
Okay.
Yeah.
So what kind of growth you can expect from the product mix change in FY23?
Very difficult to give a number, at this moment.
Okay.
Yeah.
Okay. Thanks so much. Yeah.
Thank you. The next question is from the line of R.K. Goenka, an individual investor. Please go ahead.
This call is now being recorded.
I'm sorry, that was a recording line. We'll take one last question, which is from the line of Viraj Mahadevia, an individual investor. Please go ahead.
I had a question regarding raw material prices. There's recently been a spike in steel, etc. Do you pass it on to customers with a lag of a quarter, and how does that work?
Yes. When it comes to the OEM, yes, we do. We